Welcome back to smarthelping.com. I've got a real estate development template here. I've done quite a few real estate models, but I've never done one in such a way as this, and I thought it might be useful for some people to use. So normally what I do with models is you have assumptions, you enter those assumptions, and then a monthly and annual summary will populate over, 3 years, 5 years, 10 years, whatever the case. Well, here's a little bit of a different style. On this model, so let's say you're a real estate developer. Well, first let's get into what the use case is here. It's for any real estate developer that's going to go buy the land, do all the construction, build the buildings or housing or whatever, and then sell it. And then that's it. That it doesn't have like rent or anything like that. It's just you're going to buy, you're spending money in construction, and then you're going to sell at the end, and that's it. Now, there's some very interesting concepts here that involve the timing of cash flows to figure out what your return might be. And the only way to do that is with the internal rate of return calculation and to know the timings of when cash is going out on a monthly basis and coming back in. And because construction projects are, last, over months, and it doesn't really make sense unless it's a gigantic project that um, you'd look on an annual basis, but normally, even that, you might be using a monthly timeline because you need to know when things are happening, when cash is coming out, when you have to draw maybe for a loan, a construction loan. So there's a whole bunch of different reasons why it's actually better here to enter the data right on our model tabs. So this is for, let's say you're doing construction. Um, I've broke it into, you've got 3 phases, and you don't have to use all of them. You could use one of them, or two of them, or three of them. And you've got soft costs and your hard costs for each phase. And what you do as a user is you just literally, you can define the start month of the model. I guess it doesn't matter if it's the first month of the year, it could be any month, but in general, you would probably want to use the first month of the fiscal year. And it goes out for 4 years in time. Typically, you only need 3 years for this, but I put 4 to be safe. So, uh, all you do is, and well, so this is going to be a budget of what you think is going to happen. So, what you think you're going to sell units for, and over the 4 year period, when you think those units will sell. And I've done 3 different phases for the selling as well. And the user just defines the price per unit, the weighted average price, and the amount sold in each month. And there's no advanced logic here to figure out like on assumptions. It's literally go to the month, enter the data, and it'll populate. For example, let's say I'm going to sell for phase one 10 units at 500,000. That's $5 million that comes in that month. Now, for the costs, it's the same deal, but so you've got soft costs here. You just enter, let's say, $1 million. Um, you enter it when you think those costs are going to happen, and you can go through just enter. Um, you could define the soft costs here, and those will populate for each of the phases. You don't have to obviously fill in every one if it doesn't make sense for a given phase. And then it's going to total the total cost down here. Now, as this is all happening, over on the left here, you've got sum totals that tell you what you've budgeted, what you've actually used, and that'll be the actual tab is over here. It's the same exact concept as the budget, but it's just actual. So this is where you actually put what has happened once it does happen. And then on both the budget and the actual monthly, you can see what's been budgeted, what's been actually utilized or used of that budget, or it could be over, and the percentage under or over. So here, architecture service at $1 million. Let's say it actually ended up being 800,000. Now you can see over here, okay, I used 800,000 of $1 million, so I've used 80% of my budget, and that's very valuable information. and that's going to show up on both budget and actual in these first three columns here. So that's kind of makes it easier to manage what's going on for each of the line items. So that works for soft costs the same way. It works for hard costs in the same way. Um, phase 1, 2, and 3. And you can also hide up here in the top left. If you hit 1, it'll collapse all the categories, so you can just see the line item totals, which might make it easier for you to digest once it's all filled out. Now, the complex part of this is in the cash flow and loans and equity requirements. So this model actually will allow the user to see, based on expenses and projected revenues, what the total costs are, what the total cash flow is, so revenues less expenses, um, what the cumulative cash flow is on the project, and then there's the ability to do loans. So if you go to the actual soft cost tabs, which you'll see there's phase tabs here and soft costs. These are just totaling what you actually enter in the model, so you can see like them separated if you want. No data entry required here. These just automatically populate. But on the soft cost, you can enter the loan to value, which is going to be, let's say it cost $1 million for your costs. The bank will give up to 80% of that, so you've got to provide the other 20, and that's going to be how your equity is requirement is defined. So how much cash you need at any given month. And then also, as you start selling things, let's see you're still building things, but then in phase 3, but you've sold things in phase 1 now, or from phase 1. So you have to start to pay back the loan. Well, there might be some percentage of every proceed that you need to pay back. So you can define that there, and it all automatically populates in this logic here. So you can see your loan requirement, the amount of loan repaid. Let's see if you made sales here. Where do we have our one sale? Did we put it in here? Might have been on the actual. Let's say we had a sale here. Say 10, or let's see. Let's do 2 million. One unit, just so you can see the logic. So you can see now you've paid back 80% of that loan because, or I'm sorry, we're paying back 70% of this, but 70% of this is actually more than what the loan is, so we only have to pay 100. So there's logic here to figure out. There's hidden columns here with even more advanced logic to know what the loan requirement was. So you can see here the loan requirement was only 80% of so 80% of $1 million is 800,000. So you had to take out $800,000 loan. You had to come up with the other 200,000 on your own. So your actual equity cash flow, which is how we calculate internal rate of return, here is negative 200,000. And your equity position is basically how much money you've got into it. Or if it's positive, it means you've actually got money back net on that. So on this month, you only had to pay back 800,000. So you're now getting 1,182,000. And why is that? Well, you've paid back all of the loan and the interest reserve. This is the other dynamic part. You can see the interest reserve here you can enter, which is always going to be the bottom of every section in the hard costs, is going to be offset against the actual interest accumulated based on the loan amount and the interest rate you define here. And in the month where you pay everything off, it's going to go and credit that back to the cash flow. So actually, you can see here the math happens. So you had 2 million, you paid back the loan for 800,000. So that's 1,200. And then we get down to, let's see the difference between this and this, is 18. So just do my math here, make sure this is right. So, oh, right, okay. Okay, this makes sense. is negative 18,000 because we actually didn't enter any interest reserve at all. So let's see, let's say we had an interest reserve of we expected to pay 25,000. Okay, now it makes sense. So here's your interest reserve going down as interest is being used. And then when you pay everything back, the remainder of that is going to get credited. Now it was negative because it was essentially saying, well, you have no interest reserve, you actually have to pay more, and that's why it was actually less than that amount, which that makes sense. So now if we say, okay, we had 2 million, take out 820,000, add back 6,000 of interest reserve that was never used, and there's your amount of cash flow for the month. So this logic is working dynamically no matter what numbers you put into your revenues and costs, it will work over the course of the 4 years. Um, and again, just remember the interest reserve is always the last row in your hard costs. You can change the names of any of these other ones to be anything you want. Doesn't matter. It's just totaling up for a cost. But the interest reserve is special because it's being referenced down at the bottom. So that always has to know that that row is for interest. So then, yeah, you just this will show you the result of basically building the cost to build, selling the different cash flows. The final result is a summary basically showing you total proceeds, total equity required, net return, ROI, equity multiple, monthly and annual internal rate of return. The reason why you use a monthly and then convert it into annual is because we want to see what the cash flows look like on a monthly basis because it's more accurate than just doing it on an annual, especially for real estate development. So it's super important that we did it that way. It's more accurate. Um, so that's pretty much the model. I also added an annual tab so you can get an annual roll up of the monthly tabs. It might just be easier to see um, for the budget and the actual. And I guess that's about it. I've never done a model like exactly like this. I'm pretty excited because I think it's easy for the user to use, and it also has a lot of advanced logic to do a lot of math that's kind of hard to figure out in your head if you were doing it. Um, so that's all I got for you on this one. I'll clear out all the data so you'll actually, if you purchase a template, you'll get a blank version um, to start filling out. You can get it at smarthelping.com. I'm also going to post it at eloquence and eFinancialModels.com. Alrighty, have a good one.